We start off with an earnings alert on Ford. Shares are jumping in the after-hours session. Let's get straight to Phil LeBeau, who's got all the details. Phil.
Hey, Melissa, not only did Ford beat the street, they smashed the earnings expectations. Take a look at the chart of Ford shares after it reported earnings. The reason for the pop higher, reporting earnings of 51 cents a share. The street was expecting 27 cents a share. Forget about the fact that revenue was a smidge under expectations, coming in at $32.2 billion. Nobody's paying attention to that right now. It's the earnings beat by what? 24 cents? I mean, it's a huge beat there. Their earnings adjusted EBIT margin. It's going to be 8.4%. Here's the guidance. Let's talk about this. Stronger Q4 sales. They're going to be raising their 2021 profit target. The new full-year EBIT adjusted profit target is $10.5 to $11.5 billion. Previously, it was $9 to $10 billion. That's another reason why shares moved higher. What about the chip outlook? This got a fair number of questions with the CFO during a media call just a few minutes ago. During that call, he said, look, it is improving, and it certainly is going to improve in the fourth quarter compared to the third quarter, but the shortage, it will last through 2022. It will decrease in intensity, but it will last through 2022, and he also said it may linger into 2023. That hasn't spooked people because the stock is still holding up after hours. As you take a look at shares of Ford, a couple other notes here. One, it expects $40 to $45 billion in CapEx spending between now and 2025, with only $15 billion of that being for the BEV, the battery electric vehicle investments that they've already outlined, the $30 billion. So there's substantial investments that Ford will be making over the next 4 years. No change in its full year adjusted free cash flow guidance, still in that range of $4 to $5 billion. And finally, the company will be reinstating its quarterly dividend. It will be 10 cents a share for shareholders who are of record on November 19th. Remember, Melissa, they got rid of the dividend in March of last year, right when the pandemic was beginning, because they wanted to conserve cash. They had no idea what would happen. And look, they needed to save that cash at that time, but now they have reinstated it, 10 cents a share for those who are of record on November 19th. Melissa?
Phil, the quality of the guidance on the semiconductor shortage feels so different between General Motors and Ford, and I'm wondering if you have the same takeaway. I mean, significant improvements in Q3 is what Ford saw. It feels like a very different story from what GM painted this morning.
And it is a different picture. And CFO John Lawler was asked about that just a few minutes ago, and he said, look, I think the difference might be the fact that Ford was hit by the Renesas plant fire in the second quarter. Remember that? Remember when they had to drop down and bring down their guidance because their chip supply was so dramatically hit after that fire? Well, in the third quarter, what did we hear from General Motors? There was COVID-19, a resurgence of cases brought down production at a chip plant in Malaysia. GM's a little more exposed to that plant than Ford. So it shouldn't be a surprise that we see a little bit different take in terms of what's happening with the chip supply from one automaker to the next, because we definitely saw Ford get hit in the second quarter while GM was not as impacted as much, and that's the flip here in the third quarter.
All right. Phil, keep us posted. The conference call is underway right now as we speak. Phil LeBeau with the latest on Ford. As we had been talking about, I mean, it feels like a very different story. Tim, I don't know if you feel the same way about Ford and GM.
Well, certainly when you talk about semiconductors and second quarter shipments up 67% over third quarter, up 67% over second quarter. I mean, Ford is able to talk about a softening, and despite the fact that they're being cautious on the outlook, this is not what you heard out of GM. The fact that, look, they crushed their numbers. They didn't just, beat the street. They absolutely destroyed the number, and I think, that tells people also where maybe they've been more conservative. They've reiterated this 40 to 45 billion in expenditures, or maybe they've actually underscored that, and I think that also just shows the commitment they have to both EV and some of the technologies that I think are really part of what are giving Ford a boost here. But are they better run than GM? Hard to know. In terms of historically, arguably, GM was the one that cut loss-leading businesses faster than Ford, and I think improved a lot of the elements of essentially the production chain. This is a very exciting day for Ford during difficult times. And, they can talk about commodity costs being higher, et cetera. No big deal here. Also began to talk about things like Rivian, which we talked about the other night, and probably didn't pay attention to the fact that Ford owns a chunk of Rivian. Some of their investments in EV and other technologies are also paying off and accreting to the valuation here.
So based on today, Guy, what does this tell you about whether Ford or GM is the better investment?
I think it's Ford. But yeah, maybe you're splitting hairs, but I do think it's Ford, and you can make. And we've talked about this now for a while. Just on valuation alone, a lot of people say you don't buy autos when they're cheap, and I get it. But one of the points we made is you can get to the point where they're just too cheap, and I think that's where we are with Ford. For example, Credit Suisse, I think on October 20th, just raised their price target to $20. I think that puts them high in the street. Prior to that, I think the range was between 11 and 18. I mention that because I guarantee over the next couple trading days, you're going to see analysts ratchet up their numbers on valuation. So you just put a 10 multiple on the $1.80 or so they're going to earn. And by the way, it's probably going to be more than that next year. You're talking about an $18 to $20 stock. I think that's where it's going. So for me, it's Ford, Mel.
What's your takeaway, Steve? And what would you want to know from this call, which is underway right now?
Yeah, so Ford was riddled with delays with the Bronco rollout. I want to know how the rollout of the electrified F-150 is going. But if you look at it from a semiconductor standpoint, Tesla is the platinum standard. Then we go to Ford. Then we go to GM. But if you think Ford is cheap, GM's cheaper. Ford is up 82% year to date or thereabouts with after-hours action. GM is up roughly 32 and change or somewhere around that. I think what we heard from Ms. Barra was that she is talking to the semiconductor companies. We haven't heard that from Ford, and she thinks that Q1 of 2022, things are going to look better. So Ford is kicking that out. I think Phil LeBeau said we're looking at a story that's going to be prevalent as far as chip shortages through the entire 2022 year. I think Ford is probably maxed out here. Guy hit it on the head, 18 to 20. That's where the street is as far as price target. I think if I'm putting new money to work right now, I put it in GM just to look for a catch-up trade.
I'll let you go even broader, Pete. What's your favorite pick right now? If you had to put new money in the market right now into an auto stock, what would it be?
I'd go straight to the EV space, and specifically I'd go to Tesla, which I already have some calls in Tesla. But I like a lot of the various names out there, Mel. I like NIO, I like Xpeng, I like a lot of these various names, some of the Chinese names as well. But when I look at this Ford number, it is impressive, I think. And I think the fact that they are able to separate themselves a little bit when we're talking about the semiconductors, that really was something huge, obviously, for the quarter. And then when you look at their guidance, and their guidance was very strong, and the spending, I'm looking at that CapEx. I actually think the commitment that they're making towards the battery side of things, $15 billion, that seems pretty impressive to me. I think they're trying to move there as fast as they can. And again, I'm still curious about this rollout as well of the F-150. I think that's going to be something very interesting from the electric side. I want to see how is that going? How is that progressing? We all know that chips are an issue, but we also know that pricing has been a part of the deal as well. The pricing power of both GM and Ford, but specifically Ford, I think that's very impressive to see the fact that they're able to swallow what they're doing right now and some of the spending and everything else they're doing, and yet they're able to pass along some of this, at least when we look at some of the transactions of the vehicles. Very, very impressive, I think, for Ford.